Mr. Kotak, look at the thumbs up from the markets for the union budget. In fact, thumbs up is also so conservative. All kind of records have been smashed. I want to begin by first asking you one question. Mr. Kotak, has today Finance Minister Ms. Nirmala Sitharaman unleashed the animal spirits? Something all of you in industry have been talking about. Has she done that?
I first of all commend the Finance Minister for a bold, growth-oriented and a reform-focused budget, changing the mindsets of how many people thought this budget would be. And she has lived up to the expectation to the point that like a never-before budget in a way she has produced. Of course, she has taken some calls on the level of the fiscal deficit and has decided to borrow money for getting growth, and bulk of the borrowing she's doing is being spent on capital expenditure, primarily in infrastructure. So there is a bold call, but a thought-through call which she has taken. And I believe that the budget is not just for 1 year this time around, but it is a budget which puts us on a path for sustainable growth if we can execute well down this path.
So, Mr. Kotak, let's go through some of the things that she has announced. Execution is, of course, going to be key. That is something you have been talking about as well. You understand the banking sector so well. You and the CII have been talking about the need for the government to pare down its stake in banks to less than 51%. It's not going to impact control. It's not going to impact the larger banking landscape. The Finance Minister today has talked about selling stake in 2 banks, pretty much like what we saw with IDBI. What did you make of that announcement? And what is a larger message, therefore, that is being sent out to the financial services?
I think the larger message is that India's financial sector is undergoing a reform process. We are ready to go down the path of probably ending up with 4 or 5 public sector banks, and the rest of the banks, the government is showing an openness to go below the 50% mark. It's a very important landmark step which she has announced. We are also seeing a number of other steps in the financial sector which she has taken. The development financial institution, a bad bank aggregator, followed by a sell-down process, as I believe will happen. Therefore, a number of steps for redefining the future of the Indian financial sector are also announced in this budget.
Absolutely, Mr. Kotak. And you know what's also this time different in the union budget? How clean and transparent it is. When you go through the fine print, there are no nasty shocks or like pleasant surprises. It's all there for you, pretty much what was in the speech. Is this heralding a new era?
I think the transparency and principles of governance which the Finance Minister has laid down is a very important step in the governance of this country. And I actually believe things like making sure that you share with the world whatever is the true fiscal cost is a very important step in the path towards fiscal consolidation. It may take longer, but let the world know the truth.
Absolutely. All of you had been pleading the central exchequer to loosen the purse strings, and boy, has that actually happened. 9.5% fiscal deficit for the year. But Mr. Kotak, was also very heartening is, like you talked about fiscal consolidation, a lot of measures which are being taken for asset monetization. You can literally call it a jugalbandi.
Yeah, therefore, I think she has acted both on the spend side as well as on the revenue raising side. On the spend side, if you look at it, the priorities have been 3 big areas: healthcare, infrastructure, and financial sector reform process. On the monetization side, which is again linked to the financial sector, some very bold calls. Number 1, no change in tax rates. That itself is a very positive signal. We will find ways of raising the revenue. Our focus is increasing the size of the cake, and we will ensure that over time the cake is equitably distributed. But let us focus on the big thing, make the cake bigger. And in that context, the steps which are being taken are non-tax revenues, whether it's disinvestment, a bold target of 1,75,000 crores, operational asset monetization, land sale, these are things which are truly the way to manage the non-tax revenues and the income side of the budget.
Mr. Kotak, I would be doing a disservice to my viewers if I didn't ask for your expertise on the big announcement of, you can call it a nationalized AMC for buying bad loans. Can this fix the problem once and for all? You have been talking about the need for multiple bad banks, how global capital could be attracted with that. With what has come today, how do you think it's going to work out, and is it the right solution?
I think there is a combination of what I have been speaking and what this announcement has said. This announcement has said that there will be an ARC structure which will aggregate the NPAs of various banks and financial institutions. And after aggregation, they will be monetized through the alternative investment fund structure through a transparent clearing mechanism. That is my understanding. Therefore, this ARC, which she has talked about, seems to be an intermediate aggregation point beyond which there will be ultimate monetization of these assets at a clearing price in the market. Therefore, this is actually the principles which we had discussed about multiple bad banks. But the challenge today is that different banks have NPAs and different governance. Therefore, getting each of the banks to do it individually versus that getting it aggregated at one place and then doing a clearing may actually be a superior outcome going forward. But the key issue is the movement from each of the banks to a centralized ARC must happen in a frictionless manner.
Mr. Kotak, it's a budget is, of course, a financial exercise, but it's also a political exercise, which is why perhaps we also all those statements around farmers and agriculture, MSP, all of that. But even as the agitation has been going on, this is a government that has taken a decision on a very political one, which is to do with insurance. FDI cap being hiked to 74%. Many believe that this government wouldn't do it now simply because of the farmer agitation. Wouldn't want to open up a new window, but it's gone ahead and done that. What can this mean for India's financial services?
I see this as an important signal of a self-confident India. An India which believes that players from around the world, as also Indian players, can compete freely on Indian soil with certain governance mechanisms to protect the sovereignty of India. I give it a big thumbs up from the point of view of our confidence that we can attract foreign capital, including strategic capital, and at the same time have the ability to regulate, control, and monitor the Indian financial sector. I think it's a great plus and a great signal of Atmanirbharta, both in terms of getting foreign capital and ensuring that India will be able to grow on its own terms.
And India is growing on its own turf, Mr. Kotak, without making changes as far as taxes go. It's a stable tax regime. There's no COVID surcharge that we've been talking, COVID cess that we've been hearing about. There's no new super rich tax. There are no changes in the personal income tax slabs. That's another very strong message and something maybe finance ministers around the world can learn from India.
Which is why, Nayantara, this is a reform-oriented budget and ensuring growth along with reform. Of course, it's a bet on borrowing money to be able to achieve this. And that's the bet on which both policymakers and us practitioners need to support this bet and get to a transformation of India to another trajectory.
Mr. Kotak, the government has gone out and announced a capex program which we've never heard of before, and it's high quality expenditure. We should also bring that point about, which is perhaps what the markets have been so enthused about. You've got reforms, you've got a high quality government expenditure, and not by taxing Indian citizens. Will industry do its bit now? It's been quite stubborn about increasing capex.
This is the time for industry now to gear up for private investment. For private investment to get momentum now, we need to see capacity utilizations go up, which they hopefully will in the next few weeks and months, post a record-breaking budget. And thereafter, the other important area which needs to be deftly handled between the government and the RBI is to ensure that this borrowing program and an additional borrowing program, both in the current year and next year, do not lead to a sharp increase in long-term interest rates. Therefore, stability of the interest rates along with a growth stimulus is important. That is what will make private investment come in a significant way if there is conviction that interest rates will remain under reasonable range and there will be a capacity increase which will happen in utilization.
So in fact, Mr. Kotak, you're saying that like before, we need that jugalbandi between the centre and the Reserve Bank of India. Of course, you have a meeting on the 5th, that's quite soon. But you're going to need that kind of coordination and make sure that because we worry about inflation, we should not increase interest rates. That's what you're basically saying.
No, I think what we have to ensure is that along with this bold move which the government has done, we need to ensure that interest rates and particularly long-term interest rates remain in a stable range.
Mr. Kotak, while we celebrate the fact that there have been no hike in taxes and all of that, another way of looking at it is that during a pandemic year, not much has been done to put money in the hands of the people, which could impact the economy, services, consumerism. Is there merit in that argument?
Nayantara, money in the hands of the people is automatically being handled by the fiscal deficit being increased. When so much money gets spent in capital expenditure and infrastructure, say for example, construction of roads, ports, railways, textile parks, that is money which will get spent and which will go into the pockets of people. That itself will create demand as you make the spend on infrastructure, because the output on infrastructure will come with a lag. The spend will happen today. Therefore, there is a natural demand side stimulus which is embedded in the higher investment spend.